Good evening and thank you for joining us for another episode of Business PNG. In the current economic environment, investment in renovation and refurbishment is something companies are avoiding, content with playing safe at least until the economy strengthens once again. However, this isn't the case for retail giant City Pharmacy Limited, who has once again opened up the original Stop and Shop Waigani to the public. City Pharmacy Limited has often had the knack to redefine and reinvent at the most unconventional times. Credited to the captain of the CPL ship, chairman and founder Mahesh Patel, known for taking leaps of faith at often trying times for the economy, when saving face is the go-to strategy for companies.
I think expansion is our middle name basically at CPL. We're very confident. I mean, after 30 years in Papua New Guinea, I personally am extremely confident with the economy, the way it's going. And if you look at PNG, and I keep saying, let's not look at last year or year before, you look at a 30-year span and you get your ups and downs. And I think, it's a little blip, but it's going to rise. I mean, we were actually at CPL, we were flying really from last year. We learned a lot of mistakes we've made. We beefed up our team. We had a transformation program. The Pacific Games came through. Unfortunately, the fire actually has slowed us down. And generally a fire in a large business doesn't make that much of a difference, but Waigani Central was such a pillar for our business that it's not stopping us. We are looking at more sites for Jacks, you mentioned. We're looking at additional sites to service the people, mainly in Port Moresby to start with. And then as development happens in the outstations, we will add stores in the outstations as well. We've got 2 new supermarkets opening. So actually, we've not stopped at all with the taking of the leases of the old SVS sites. Again, I wish it was open tomorrow, but because of the infrastructure, we had to strip the whole thing out, and we're spending millions to do it up because we want to raise the bar of shopping in Papua New Guinea. So new refrigeration, new air conditioning, new environment, and a lot of focus on fresh. So we're not slowing down at all.
The original Stop and Shop at Waigani Central has been refreshed with a redesigned store layout, new air conditioning, an improved product range, and expanded fresh produce section. After a July 13 fire closed the new Stop and Shop at Waigani Central, CPL has worked diligently to reopen the original Stop and Shop supermarket in order to minimize disruptions to its nearby customers. The original Stop and Shop has been a familiar resource in the Waigani area for almost 3 decades.
We have invested 3 million kina in renewing this store. We have added a few new areas. One is the Bon Cafe, in which we are sitting right now. We have added more space for fresh fruits and vegetables that we are getting in from Mount Hagen on a daily basis. We have added a new nurse station. Our nurse station is a place where our customers can come daily and see a nurse free of charge. And we have added new seating areas for our fresh produce and fresh foods that we sell from our Kai bars. Everything is renovated. There is a lot of change in the store. We have put in new air conditioning, new tiles, and it's a great place to shop.
Singh added that the company is also focused on rebuilding the newer Stop and Shop at Waigani Central.
The structural engineers are looking at the building. As per my understanding, they will come up with a report in a couple of weeks' time. We are expecting, in the best case scenario, about 12 to 15 months from now for the reopening. Eventually, the plans are that when the store that has burnt down opens, we will reutilize this retail space for something else. Maybe we'll surprise you with a new quick service restaurant offering.
Not stopping there, the group is planning to expand further by opening new branches of the Stop and Shop franchise in Port Moresby.
We are working on the sites of Harbour City and Koki, which used to be occupied by SVS. We are looking at opening those 2 stores sometimes in the first quarter of 2016. And those 2 stores are important for us because we do not have a large footprint in downtown area. Both Harbour City and Koki will allow us to access the downtown customers.
Welcome to the show, Mr. Maguire. You're here in Port Moresby to give your opinion on Papua New Guinea's economic outlook and the effects of the global drop in commodity prices. In your opinion, and in light of recent doomsday predictions, what is the country's economic outlook?
The economic outlook at this stage, I think, is a little bit difficult. And the reason why I say it's difficult is because the two largest global economies at this stage, the US and China, are heading in different directions. So we have China, who has been such a big support to the global economy and global commodity markets, starting to slow. And we have the US economy, where we were expecting to see a pickup in US consumption that would be supporting China and the other Asian economies, probably having more of a services-led growth dynamic. So at this stage, the global economy appears to be moving into a lower trend pace of growth for 2016 and 2017. And that is the opposite of what most economists were expecting. Most economists were expecting to see that the global economy would be firmer, that you'd see this rotation from US growth or from Chinese growth to US growth, and that's actually not happening. So the most evident area of where this difficulty in the transition for the global economy is making itself apparent is in declining commodity prices. And commodity prices started to decline in July 2014. That pace picked up through November and into 2015. And we think with the current demand-supply imbalance that we're seeing in many commodity markets, commodity prices are likely to continue to fall into 2016. So for oil, for example, we think oil prices are probably likely to fall to around $40, $45 in the first half of 2016, and then remain fairly flat through that second half of the year and into 2015. So for Papua New Guinea, LNG prices tend to follow oil prices with a lag of 6 to 9 months. So that suggests for Papua New Guinea, LNG prices may not actually bottom or find their new equilibrium level to around the first half of 2017. But at the moment, the way the global economy is slowing is a slowdown that is affecting commodity exporters in particular. So when we look across the global economy, we see Australia, we see Brazil, we see Canada, we see Russia, South Africa. Those economies are slowing as they're commodity exporters. And when we look across the Pacific, we see that Papua New Guinea, Timor, Samoa, Solomons, again, the commodity exporting economies are those that really are bearing the brunt of the slowdown in the Chinese economy at this stage. It doesn't necessarily mean that the PNG commodity boom is over. I think what we are seeing is we're moving through a new phase of that. So China had a growth model from the late 1990s to 2012 to 2013 that was very commodity intensive. And with the benefit of hindsight, that model was probably unsustainable. The economy grew too fast. Debt grew up in that economy. And China represents a large proportion of the global and the Asian economy. But we still have in front of us the economic ascension of India, an economy that currently has around 1.3 billion people. It will peak at a population of around 1.5 billion people by the middle of this year. And at the end of 2015, we have the 10 nations of the ASEAN Economic Community forming a single economic entity that will allow for the free trade of goods and services. And Papua New Guinea is located very, very close to the ASEAN. That will become a free trade area by itself. The 10 members of the ASEAN would already be the 8th largest economy in the world. And we think by 2020 will be the 5th largest economy in the world. So we are in a situation where growth in China has cooled more rapidly than expected. And there hasn't been the emergence of a new driver of final demand, particularly for commodities. And it's unlikely that looking around the global economy, you will see another economy like China pick up as quickly as they did. But over time, over the next 5 to 10 years, you probably will see a return to levels of demand for commodities emanating from Asia, from Indonesia, India, and the ASEAN in particular, that will be roughly equivalent to what we saw with China during the boom years in China. So for Papua New Guinea, demand has gone like that. It's now flattened off, and we're on a more gradual path back to that. So it's keeping an eye on the horizon and realizing that this demand will re-emerge, but perhaps in different geographies, and it will be a sum of demand from individual economies, not just one economy like China.
Okay, so you mentioned China quite a bit, as well as the other ASEAN countries or Asia Pacific countries, and in light of the Asian century, which ANZ has been pushing quite a lot recently, what must Papua New Guinea do to position ourselves basically to capitalize on this coming Asian century?
The key thing to remember is that the Asian century, and what we refer to as factory Asia, is actually drifting south. It's moving closer to Papua New Guinea. So if you look at the average age of a manufacturing worker in China, they're now 38. In Japan, it's 43. In Taiwan and South Korea, it's 41. As you go down into the Mekong economies, the average age of a manufacturing worker drops into the 20s. In Indonesia and Vietnam, the average age of a manufacturing worker is now 23. So multinational companies and companies who produce goods in Asia are now finding North Asia, China in particular, is one, expensive, two, it's getting old in terms of wages. So we're expecting to see factory Asia shift into the ASEAN economies. Vietnam, Indonesia, Malaysia, Thailand, but particularly Cambodia, Laos and Myanmar, given how low wages are and how young the population is. And when we look at those economies, these are economies which haven't even begun to build out their energy infrastructure, their electricity infrastructure, for instance. So as factory Asia moves south, they're going to be demanding electricity. Given the Chinese example with growth that was very polluting, they're probably going to be demanding cleaner energy, and in particular LNG. So I think, many commodity exporters are now adjusting to the reality that China has changed its growth model. It's now trying to move more towards services and tertiary growth. But there'll be other economies that will be picking up that energy-intensive manufacturing production. And fortunately, they're actually geographically closer to PNG. So I think, that's an important dynamic to watch. Given the age of the Chinese population, given the demographics of the one-child policy, the rising old age dependency problem, the Asian century was never going to be just a China century. It was going to be a much broader construct, including India at 1.5 billion people, the ASEAN at 600 million people. Together, that's almost twice the population of China. So I think the first decade or two of the Asian century was dominated by China. The rest of the Asian century is clearly going to be dominated by the ASEAN and India.
Yeah. Okay. I mentioned China, a lot of people mention China because it's sort of the big brother of Asian, the Asian
Yes.
countries.
Yes.
PNG sort of plays that role in the Pacific, Pacific economy. So how can Papua New Guinea basically not follow that same, that China is going through right now? How can we, sort of cement our status in the Pacific?
Look, I mean, I think what we need to see is most economies that have been able to successfully transform their industries and broaden and, you know, retain a leadership status have been economies that have constantly, one, had a longer term vision or economic plan for where the economy is heading, and two, have been able to constantly modify their policies around that plan depending on economic circumstance at this stage. So when we look at the ASEAN economies and we look at how they're starting to pick up the mantle from China, what you're seeing is many economies like Malaysia, Thailand, etc., have medium-term plans to develop infrastructure, to develop distributions of goods and networks, etc., that are 5, 10, 15-year plans. I think it's very important for business and for households that they do see that type of visibility. So one of the important ways of sort of, you know, retaining a leadership position is to be able to articulate a longer term vision of where you see the economy heading. The other way is investment, and investment is not just in physical assets like infrastructure or roads, bridges, railways that make the distribution of goods around the economy easier, that make it easier for people from the highlands to perhaps come into the city areas and look for jobs, but also investment in soft services, in skills, etc., so that the economy can actually broaden its growth base across the spectrum of services. So I think sort of identifying the medium-term plan of Papua New Guinea remaining the capital of the Pacific, articulating that, having that as being a shared vision for all Papua New Guineans and something that everybody is working towards, is the simplest way of doing that.
And that's all we have for you tonight. For more business news, or if you would simply like to view this episode again, visit MTV online at www.mtv.com.pg. Or to join the conversation, like our page on Facebook for daily business news, or follow us on Twitter at Business PNG using the hashtag Business PNG. Until next week, enjoy the rest of your viewing on MTV. I'm Leanne Jarari, and this was Business PNG.